Hello, this is John Kvale, and this is our May podcast, Financial Planning Capital Market Review. And I don't have all my fancy GoPro, so I'm just my video is going to stay up in the corner, so maybe that'll save you a little bit of angst here. It is June 2nd, Sunday afternoon. I just finished this post and wanted to get the recording out for us tomorrow, so let's get going. As a reminder to new folks, we do this in a kind of a video podcast format. I verbally go through this to give you an idea of what I'm thinking, and those of you that are on the road and listening, don't take your hands off the wheels, but it will basically what it will do is allow you to just listen to this and not have to actually read it should you not want to. Okay, so I'm scrolling down. Those of you that are listening, I'm scrolling down to the first financial planning tip. This is amazing. Longtime client and friend of mine came into the office, and this post here, those of you that are listening, I've got the hot link to the post that I did in the month of May. This post had the picture, and I just took the picture of it. It's a 99% annual percentage rate charge. What's even more amazing about this is it looked like it was a donation to a charity. So the title of the post is, read the fine print. It's still important. If you don't want to read it, send it to us and we'll read it. So, but still, don't take it slight. Okay, sharpening the saw. This was from actually from a conference, and here's the link to this. Keep the dog quiet. Here's the link to the actual post, and what this is I just wanted to highlight. This was actually one of my favorite charts that came out of this two-day conference. I'm going to go dig deeper to this in the newsletter as well. And basically what it talks about, this is from Michael Kitkus, is here's all the different tax levels right now, particularly for those of us that are in retirement. Look at this tax bracket right now. This tax bracket is between the 10 and 12%, and that's $77,000. You go, okay, well, if you have a $100,000 income, and that's taxable income, let's say you have some Social Security and pensions and things of that nature, you get a $25,000 standard deduction if you're filing joint. You might be in that lower tax bracket. So we're really reviewing this and looking at least thinking and calling it to all of our attention of tax bracket management while we're in retirement. Again, look for a bigger article in the newsletter. For those that are longtime listeners, my publisher is actually taking a vacation, so she's got me hustling to do the newsletter. And that's why this will be a little bit shorter, because I'm doing the newsletter at the same time I'm doing this post and the regular post. And those of you that are just listening, I just scrolled down to the yield curve inversion. Yes, it has. Honestly, I figured out how to do a chart on our trading software at the office. Any of you that have been in the office, you see the dual screens that have all the trading things that are going on it. This is basically it's a 13-week or 90-day. The 90-day rate minus, actually it's the 10-year rate minus the 90-day rate. That's what this is. 10x minus the IRX, which is 10-year constant maturity versus the 13-week. Okay, when this thing goes down, my black line that I put on here, when that is 0. And so when it dipped in late March, it inverted, not for a very long period of time. Those of you, I'm going to try something here. This thing, I think I can zoom it a little bit. Let me see if I can zoom. There we go. I zoomed a lot. For those of you that are listening, you'll get a kick out of this, but I just zoomed it a whole lot. So now you can see, I'm going to move this over a little bit more. Got to move my box over so my picture disappeared. Now you can really see. I just zoomed this for what it's worth to the latest inversion, and this has inverted by a good bit. As I mentioned up here in the, I'll just shrink this back down. As I mentioned up here in the verbiage, the 10-year is at about 215 today, and the 90-day is around 240. So we're inverted. The cool thing about this, those of you that are listening, I'm sliding back up to the top. Those of you that caught the last article of the month, or the second to the last, had a chance meeting at another conference with Robert Kaplan, the local Dallas Federal Reserve chairman, and I recorded an hour-long conversation, and he went into great detail on a question that I asked, which was about the inversion. So I'm looking forward to dissecting that and bringing it back to everybody's attention. I want to thank everybody for listening. It went a little bit longer than I thought. Always do. You know, they call me Chatty John. But anyway, have a great start to your summer. It's getting warm. We're still getting lots of rain down here. And thank you so much for all the comments and all of your watching. Have a great day.